Okay, let's talk about the dollar against the Japanese yen, because this is one of those setups where if you only look at the chart, you're probably definitely going to miss the actual story. The actual story is not that just, dollar against the Japanese yen is too high and therefore we should be bearish, because that's how traders get caught, trying to fade tops and bottoms in a macro trend just because something looks too high or too low. That is not the hedge here. That is not the reason why I'm making this video. The reason why I'm making this video is that the real story in the dollar against the Japanese yen is that it's pushing back into the same zone where Japan has already shown that they're willing to intervene in the markets. They're willing to intervene to stop the Japanese yen from weakening. Okay, Japanese officials, ministers of finance, Bank of Japan as well, they were already moved past, the soft, polite, we're watching markets closely and we're ready to intervene. They went into the decisive moves to stop the Japanese yen from weakening, and that's exactly what they did in April 30. At the same time, speculative positionings against the yen has become extremely crowded. Record shorts against the yen. Let me explain why this matters. The key is that intervention is not just about a level. It's about intent, it's about perception, it's about whether the market starts to treat the yen as, a one-way trade, as, just a guaranteed of weakening. Now, when that happens, when the market gets too comfortable in shorting the Japanese yen, that's where Japan starts to get uncomfortable. That's where the Ministry of Finance starts to get uncomfortable. See, from Japan's perspective, the problem is not just that, the dollar against the Japanese yen is too high. The problem is that they always ask themselves, is this move becoming speculative? Are trading uses the yen as a funding currency so aggressively that it becomes destabilizing for Japan, destabilizing for the inflation picture? Is the market starting to bully essentially Japan and the Ministry of Finance and the Japanese yen? When that answer starts to become yes, that is when the risk changes. That is where the opportunity begins, because Japan does not want traders to become too comfortable selling the yen and, trading Japanese yen weakness, because otherwise they lose confidence in the currency, they lose control of the currency, they lose control of the inflation narrative as well, because the weaker currency tends to stimulate inflation. And right now the Bank of Japan is trying to fight inflation, because they're actually in a hiking cycle, slow one, but still a hiking cycle. So all that said, here's where this becomes extremely interesting and the reason why I'm making this video. Japan has already acted, okay? This is not just theoretical stuff. Maybe one day they will intervene situation. No. On April 30, USDJPY pushed above 160 and then it turned lower pretty violently. Now, that wasn't random, it didn't just turn lower because it hit resistance. No, it turned lower because Japan, in particular the Minister of Finance, said that we're getting closer to taking decisive step in the FX market. Now, decisive action is a key word to say, we've moved past the theoretical intervention rhetoric and we're actually taking steps to bring this lower. And USDJPY went from 160.50 or so all the way down to 155. That's about 500 pips in a day. Actually, if you zoom in, it's about in a couple of hours. Okay, that's why this setup is extremely interesting, because now the dollar against the Japanese yen is back near the same danger zone, the same exact level in which they have already said, hey, be careful, we're actually closer to taking decisive steps in the FX market. And at the same time, the speculative positioning, exactly what the central bank, exactly what the Ministry of Finance does not want to see, is a record highs. Speculators are trading Japanese yen weakness and they're extremely exposed. They want the Japanese yen to continue weakening. And that's what it makes really interesting, because if I want to put it in very simple terms, USDJPY is starting to set up for another potential intervention move. It has the ingredients. Price is back in the intervention zone, exactly where they intervened a month ago. Officials, Japanese officials have already warned the market along the way. They started to warn, hey, be careful with that Japanese yen weakness because we're going to intervene, okay? You don't know exactly when, but we're going to. And now speculative positions have hit record extremes And that is exactly what Japan does not want to see. So this positioning right here is actually extremely important, because when speculators hit these extreme levels of positions, and it happened 2 times already in the past, well, interesting things start to happen on the Japanese yen. A lot of traders are positioned, are overexposed to a certain scenario, more Japanese yen weakness. So in practical terms, many of them, record positions of them, are looking for the US dollar against the Japanese yen to continue to move higher. And this is not actually just the dollar against the Japanese yen, this includes every other currency against the Japanese yen. So they're looking to collect carry, they're looking to keep following the trend. They're assuming that as long as interest rate differentials remain in favor of that currency against the Japanese yen, the trade can keep working. And to be fair, that logic is right. Okay, that's the right macro logic. It's real. The yen weakness is real for real macro reasons. Japan has lower interest rates than, for instance, the United States. The Bank of Japan is moving slowly with interest rates hikes. The dollar is remaining supported with on inflation and hot labor market data. Potentially, the Federal Reserve may look to hike interest rates, or at least it's being priced to potentially hike interest rates. So the macro logic to be long the US dollar against the Japanese yen is true. It makes sense, but it doesn't take into account the Bank of Japan. It doesn't take into account the Ministry of Finance. And when a trade becomes too crowded, it becomes vulnerable. Because now there are a record amount of positions that have to, if something goes wrong, they have to all rush for the same exit. If an intervention takes place, for instance. If USDJPY starts falling sharply, whether because it's an intervention, because it's a fear of intervention, it could be jawboning from the Ministry of Finance, or a broader unwind for whatever reason, then what happens? All these positions have to unwind their positions, so they have to sell their USDJPY longs, so they have to buy back the Japanese yen to unwind, to close their USDJPY longs, their EURJPY longs, whatever it is. So to close their yen short positions, they have to buy back the yen. That's what creates important reversals, which you're going to see in a second is actually what happened in these 2 instances. So Japan could be the spark that triggers this unwind, this reversal. The crowded yen positions is actually the fuel that makes this trade so interesting. So this is the setup. And by the way, as I said, this is not just theory. If we look at the previous 2 instances in which speculative yen shorts hit extreme positions, if we look, for instance, at July 2024, you're going to see an extremely interesting chart. A very interesting and similar dynamic as well to what's going on right now, because USDJPY had pushed into extreme levels, speculative yen shorts were stretched, as you can see here, and the market had become very comfortable trading against the yen. Japan had already intervened right here. This was the first intervention they did. The market ignored the warnings, went to push back above the higher interventions, and then on July 2024, with extreme positioning in speculative yen shorts, they hit with a second bigger and more sustained intervention, and there was a massive meaningful reversal of about more than 1,500 pips, more or less. And the fuel for this move is not just the Bank of Japan and the Ministry of Finance intervening. Part is that, but the fuel of this move is the extreme positionings in the speculative yen shorts that had to unwind, and unwinding, they had to buy back the yen, causing this important reversal. So that's the first instance. The first intervention does not always end the trend immediately. Sometimes the market disregards it, somewhat like it's doing right now. They intervened the first time on April 30. The market is disregarding their threats. It's pushed all the way back to the same intervention level, and now we'll see what happens. But essentially, this is the point. Now, the second historical example is June 2007. Speculative yen shorts hit extreme levels. Once again, the same levels, but actually above that level right now, that we're hitting now. And what happened on June 2007? The US dollar against the Japanese yen, and pretty much every currency against the Japanese yen. Okay, this is not specific to a USDJPY. This is everything against the Japanese yen. What happened? It topped. The chart actually goes way lower here. It actually topped and started moving lower, reversed Why? Because extreme positions were extremes, in fact, and that triggered an unwinding of all the speculative positions that had to buy back the yen, okay? And that caused a trend reversal. Now, this is where we are right now. Japan issued their warning on April 30. They intervened for the first time this year. They intervened officially, pushing the Japanese yen stronger against the dollar and pretty much every currency out there. But now what's happening? Now the market is back to the same exact level in which they intervened before. So the market is underpricing the threat of the Ministry of Finance intervention. Speculative yen shorts are the biggest ever. They've hit past their July 2024 peaks and the June 2007 peaks, which, as you've seen, both of these two instances were tops on USDJPY and pretty much every currency against the Japanese yen. So there's something there to take into account. And so the setup is starting to get pretty interesting, because I'm not saying at all that, USDJPY short is interesting because the Japanese yen is too weak. I'm not saying that. I'm saying USDJPY short is interesting because we are exactly at the same level in which the Bank of Japan and the Ministry of Finance already intervened, actually sent a decisive warning. They didn't just say, oh, we may or may not intervene. They said getting closer to taking decisive step in the FX market. Now, decisive step means, hey, we're taking action, and decisive means decisive. For a couple of months, for some time, we don't want to see price back there. And so now price is actually back there. So the pushing the Ministry of Finance, the market is positions, the speculators are actually pushing the Ministry of Finance. Hey, so what now? You're going to take action again or not? We'll see. I personally believe that there is a real chance that we're going to see a sustained, substantial move lower in USDJPY soon. Whether it's triggered by, a full-scale intervention, an unwinding of these crowded yen positions, just maybe a verbal intervention or a shift in macro. I don't know exactly what the trigger will be, but what I can know is that the opportunity is there, the ingredients are there, everything there for an opportunity to potentially have a substantial move lower in USDJPY. I'm talking about 500 to 600 pips in a couple of days if they intervene substantially. So that's not something you want to ignore. At least that's not something we ignore at all. We're actually already positioned for this. Now, this is the setup. That's all. If this helped you understand the bigger picture beyond, just USDJPY is at resistance, it's too high, so we're going to short it. No, that's way beyond that. That actually helped you understand how you can read and see and create a macro thesis behind the trade. Hit the like button, subscribe, and tell me in the comments below whether you think Japan intervenes again soon or whether they let this past 161.